morning to all my central time zone people, and good afternoon to everybody on the East Coast. I know it's 12, and then anybody on the Pacific Coast. Hey, let's go ahead and drop how many years of experience as well as the state you're tuning in from. All right. So, how many years of experience do you have in trading, investing, whatever that might be? You can add them together, you can multiply however you see fit. Let me know in the comments. I'm just curious how many people we got with us live, and if you're on the rewatch crew, do the same, do the exact same thing. So I want to know which state you're joining from today, as well as how many years of experience you have. So I've been trading, investing since 2001. 2001. So I was 21 years old when I started investing. I started really getting into technical analysis in 2020, right around COVID, the height of COVID, right? So that's when I really jumped on board. My name is Jamila. For those of you that don't know, I'm the co-founder and master trader with Discipline Trading Team. I also have a community, and I know I've got some accelerators that are joining us live. My accelerator community, man, drop in the comments, drop a big A in the comments if you're in the accelerator community, and drop a DTT if you're on the Discipline Trading Team. So that is a little bit about me. And why are you here today, right? Why are you here today? Today is all about trading truths. We call it Trading Truth Tuesday, and that's exactly what we're getting into. So you're now a truth seeker. If you're joining me live, if you're watching this on the rewatch crew, you are a truth seeker. You're a truth seeker. So what's up? Welcome. Welcome to the fourth Trading Truth Tuesday. I need you to do me a favor because I do all of this for you, and it's all for free right here on YouTube every Tuesday. Unless there's something happening with my basketball team, I'm also a coach. I do this every Tuesday, 11 a.m., 12 p.m. Eastern Time. So, with that being said, do me this one favor. This is all I ask, is that you hit the like button and you subscribe to the channel and share it. I guess that's 3-in-1. So it's a 3-in-1. Like, share this, and subscribe to the channel. Share this with someone that also may be just getting started in their trading journey, has been on the trading journey for a while, or is looking to just fine tune what they're already doing. This live stream every Tuesday is for you, right? We're going to break down some of the biggest myths, some of the biggest scams, some of the biggest things that get in your way when you're trying to trade. All right. So I got one question for you as we get started. I'm just double checking the comments. I got one question for you as we get started today. I got one question. It's my first question of the day. I'm going to ask questions throughout. So make sure you have your keyboard ready. Make sure you're ready on your phone. If you're at work, I understand. Just tap the heart button if you're loving it. Tap the thumbs up right there in the comments, whatever works for you. If you're busy, if you're joining while you're driving, whatever that might be. All right. How many indicators? How many indicators, if you're already trading, you using a charting platform, how many indicators do you have on your chart right now? How many indicators? I have 7, but only use 2 all the time. I see Tina chiming in the Messenger app for the accelerator community. So she says she only used 2. She only uses 2, but she has 7 in total. So do you have 5? Do you have 10, 15? Do you use the RSI, MACD, MACD, the Bollinger Bands, the stochastic oscillator, Williams percent R? There's a multitude of them. Do you use moving averages, simple versus exponential? Do you use Keltner channels? I mean, there are so many indicators out there, thousands. And then there are people that are adapting, and then people that like the Bollinger Bands, building and expanding on something that was created years ago, decades ago, continuing to add to it. How many do you have on your chart? Right? I want you to drop that in the comments. And again, if you're watching this on the replay, on the rewatch, drop hashtag rewatch crew and drop how many indicators you have on the chart. Which one do you like the best? Which of your indicators do you like the best? All right. That's my first question, just to get an idea of what type of indicators you like to use, what type of indicator, how many indicators you have on the chart. And again, this is all about trading truth, and it's not about embarrassing, shaming, or what have you. But today, I'm going to give you the brutal truth. I'm going to give you the brutal truth about these indicators that that most people don't want you to know. Like if I had built an indicator, if I had the Jamila oscillator, I would want everybody to use the Jamila oscillator, and I would push the Jamila oscillator. The more indicators you add, the worse your trading gets. If you're new, if you're just getting started, or if you've been trading for a little while, if you've had some ups and downs, blown a few accounts, that's great. You're in the perfect spot. I'm telling you, you're in the perfect spot, because I believe you can't, if you don't blow an account, you're probably not ready to trade. If you don't, or at least a big trade loss. But more indicators does not equal better trading. It actually gets worse. The complexity is not making it sophisticated. It's not, that's not what you want to do. You don't want to make your charts complicated to be more sophisticated, to look cool, having multiple screens and all. And don't get me wrong, there's a place for that. So I'm not like shading anybody. But if you want to keep it simple, right? Like Tina said, who's in the accelerated community, if you want to keep it simple and be accurate, be more accurate, 2 to 3 is all you need. And then you can layer on for confluence. For some people, this is keeping you confused. For some people, this is keeping you confused, and it's not worth it, right? Let's see what Tina says. She says, I use IBSV2, which is an inside bar indicator, and kill zones to give me the session high and lows. Excellent. Excellent. So in the session highs and session lows, it's just a visual, more, it's not necessarily an indicator. Right? It's just drawing lines, almost like a grid, if you will. So I wouldn't even count that one as an indicator, because you could literally put those on the chart yourself. But it helps you to understand where things started, and or how high things got and how low things got. So that's great. If those are the two you use, those are the ones that get you going in your strategy. That is excellent. Great job, Tina. So with that being said, make sure, as we're about to get into this, right? I need you to hit that like button and share this. If you've got more than 5 indicators on your chart, I want you to go and drop me a 1 in the comments. Right? Drop me a 1 in the comments and help me understand how I'm going to help you today. Because I really need those folks that are +3, +5, +6 indicators on their charts to step to the front so I can help you today. That's what I'm here for. Let's see what Tina said here in the comments. Well, then I only use 1. Exactly. You're only really technically using 1. It's kind of like with session lows, session highs, any type of measurement tool is not necessarily an indicator. It's more or less telling you this is what happened. When, you could use the open, high, low, close at the very top of the chart, hovering over a candle. It's not necessarily an indicator. So good job. Good job. Absolutely. Oh, yes. We are live on YouTube right now every Tuesday, 11 a.m., 12 noon. Tina asked if this was public. She thought we were in the community. No, we are live on YouTube. We're live on YouTube. So with that being said, I want to make sure I tell you to stick around to the end. I'm going to show you a very minimal chart setup that you can use right now. You'll be able to use it immediately if you've got just even a little bit of charting experience on absolutely every trade and every fundamental stock purchase that I make. So if I research a company and I'm looking to own it long term, I use this exact same setup for both trading, short term, day trading, swing trading, long term trading, as well as purchasing stocks to buy and hold. So stick around to the end for that. If you're new here and this is your first Trading Truth Tuesday, this is where I expose the complexity scams, some of the things that you feel like or that you've heard, and we're just going to narrow it down to what you need. Every Tuesday, I'm going to give you the truth. So sometimes it'll be about things that I don't believe help people, especially when they're trying to get their own rhythm. And then I'm going to challenge you to challenge me, right? Because what I share with you, I expect you to go back and validate for yourself too. And we're going to do that every Tuesday right here. So make sure you're subscribed. Make sure you hit that like button so you get the notification every time we're live. So the first complexity scam about charting, about indicators, is more indicators equal more sophistication. And that's a lie. That's an absolute lie, right? Complexity is oftentimes intentionally and unintentionally sold to justify people either asking you to join their programs, asking you to buy a course, asking you to subscribe to this or that, is because of the complexity. And I want to break this down for a second. And the reason why I say it's intentional and unintentional is because, again, we all as human beings have an ego. We all have a complex. If we create something, which I believe there's nothing new under the sun, there is something about whatever that indicator is that was either robbed or stolen, heist, lifted from another indicator or some other analysis and built and added to, right? So that's one thing. If I create something, I want you to use it. I think it's the best because I've poured my time and my energy into it. So therefore, intentionally or unintentionally, I want you to use it and I'm going to push it. And then here comes the next great tactician on the charts who also created something or took two things and put them together and said, this is the best thing. And now you got two things. And then you get another one. And oftentimes you're chasing these indicators and then layering them on top because number one, you're trying to learn. Number two, you've either bumped your head, blown an account, or lost a big trade. And it's just like, whoa, I don't want to feel that again. Let me go get something to double down and confirm. And before you know it, you've got 5, 6, 7 indicators on your chart. Number two, with this complexity, Sam, your brain can only process so much information before it shuts down. The average person, I did this exercise in our community, I think it was last week. I asked everybody, and we were live, doing a live trading session. And I said, hey, I want everybody to type in the comments. And so I want you to do the same thing right now, shorthand. I don't have to fully understand it, but I want you to type shorthand your strategy in the comments right now. 1, 2, 3, 4, 5. I look for this. This is my first signal, second signal, third, fourth, fifth, and then I get into the trade. I want you, I ask my community to do this, to write out their strategy. And you, man, most people can't do it. Most people can't do it. Your brain can only process so much information. And if you can't even regurgitate, something that you've back tested 100 times, something that you've practiced, even if you've taken a strategy from someone else, and you can't say it off the top of your head, how could you ever trade it? And the more indicators you pile on top of the strategy, the harder it is for you to mentally process that. Right? So imagine when you're 40 years old, you've been driving a car for 20 years. And I asked you, okay, what do you do when you're about 100 yards from a red light? What do you do when you're about 50 yards from a red light? You'd be able to walk me through that because you've been driving for 20 years. And I'm not saying you have to drive these charts, technical analysis on the stock market for 20 years to be great at it. But the more complex you make it, the harder it is and the longer it will take for you to make money. If you don't remember anything else I say today on this live, I want you to remember, if you don't remember anything else, the more complex you make your strategy, the longer it will take for you to make money. I don't want you to forget that the goal here is to make money. So if you have a very complex strategy, your brain can only process so much information. Your brain can only go after so much information. And at a certain point, getting in a rhythm of doing it on repeat over and over again, the same way over and over again, is very difficult with more information. It's easier to add 1 plus 1 than it is to do a derivative or an exponent of 2,286. I don't even know what that is in math, but you know how math gets more complicated over time. It's absolutely impossible. Not impossible, but it's harder. but it absolutely will delay you making money. So, number three, right? Indicators are all based on the same thing. I want you to drop in the comments right now. What do you think all indicators are based on? What do you think all indicators are based on? Right? So, we've covered this is the number one complexity scam that you'll find yourself running into. Right? The first one I talked about is complexity sometimes is unintentionally and intentionally sold to justify you paying more. And let me turn these notifications off here. These are sometimes sold to you to justify you paying for something. And then they get stacked and you bump your head, right? So that's number one. Number two, your brain can only process so much information. And this is number three. Number three, indicators are all based on the same thing, price, right? Without the price data on the chart, Apple stock goes from 200 to 201. That's your price data. That's what all indicators are based on. And here's what they don't tell you: RSI, MACD, stochastic, they're all just different ways of looking at price movement. That's it. That's it. So, what would you say is the most important thing for you to learn? Price action. Before you even get to indicators, understanding price action unlocks all of your indicators. And I may say this a couple of times here. If you're using an indicator and you haven't studied it, meaning you haven't, like back in the day when they said you know in order to get credit in your math class, you had to show your work for the math problem. You couldn't just answer the question. You actually have to show the work. And you don't want to put an indicator on your chart until you can show the work, meaning you can actually read about it, understand it, and explain how that indicator works. If you can't do that, you should not be using the indicator. Simply because you don't understand how it works, whatever price action model they're using, moving average, how many days, all the different things behind the indicator, if you don't understand it, you won't understand when it can give you a false reading, because they all can. The reason why they can do that is because they're based on historical prices, trying to predict what could happen in the future or let you know what's happened in the past. That way you can make a decision about the future. Think about it. If you need 15 indicators to make a trading decision, what happens if, say, 8 of them say buy and 7 say sell? At this point, what do? I hope you decide not to trade. I hope you say, you know what, I'm gonna pass this one by. I'm not gonna look at this one. This is exactly why I created the 10-minute daily routine, right? The 10-minute daily trading routine is a free resource that I created here just for you. It focuses on what actually matters and it helps you, not me, not someone else, you personally, based upon your schedule, daily create a routine around trading. Now, can you expand this as time moves forward? Yes. But the habit of doing the same thing over and over again, the discipline of it is everything. I've got a link for that. If you look in the comments, there's a link for the 10-minute daily trading routine. I want you to grab that resource and start today. The sooner you start, the sooner you get to layering pieces that make sense to not only your schedule, but to your style of trading. It's so important that because your style may not be my style. And I've gone through different seasons, different points in my life where my style had to change based upon my life. And that's okay. This 10-minute daily routine will help you get started on that process. The sooner you start, the faster you move. Now, let's move on to complexity scam number 2. Conflicting signals equal better confirmation. Conflicting signals equal better confirmation. I really don't understand this fully, how two things saying something totally opposite could actually be a good thing for you. At that point, you should step away from the charts. It doesn't sound logical until you realize it's destroying your trading. It can't be logical. Conflicting signals don't provide confirmation. They basically tell you you shouldn't be doing what you're doing. How many times have you had an RSI saying oversold while the MACD was bearish, while the Bollinger Band show a squeeze, whatever it might look like? You think you're getting multiple confirmations, but you're actually getting multiple contradictions. instead of clarity. And if you layered on different time frames, it gets even worse because the RSI from one time frame to the next could be totally different. Again, this is why it's so important to keep it simple. Number two, you end up cherry picking the indicators within your entire strategy. So if you're looking at 10, you'll go with the 3 that support what you believe, your own internal bias. This is something I'm working on with a couple people in the community right now who only trade to the high side. They only buy. They never sell. They never look at puts. They only look at calls. And that's okay. Nothing wrong with that. But every time you look at a chart, all you can see is that you want to go up. But the market doesn't always go up. So how do you overcome that internal bias that I know I'm never looking for sales, but I got to understand when the market is bearish? And you'll focus on the indicators inside of your strategy that has 10 that are showing you bullish because that's the way you want it to go. And you'll follow it down a rabbit hole, not understanding the price action just to get the confirmation so I can go the way I go. The problem with this is if you win the trade, it's actually worse than if you lose it. Because if you win it, it reinforces the behavior that you should continue to do this. And if you lose, you're unable to figure out why. You're unable to pinpoint what should I make an adjustment, if I should make an adjustment at all, because you're cherry picking the indicators to agree with your bias. And the third point under this scam, right, that the more indicators create more excuses for bad trades, right? After you lose a trade, again, like I said, which indicator should you blame? How do you pinpoint it if you ignored some of them? How do you pinpoint it? How do you know which one that you need to say, okay, well, did I miss something here? Did I overlook this? Was I on the right time frame? There's too many things involved. So the more indicators you have, the more confusion you'll have because you'll never be able to pinpoint what's going on. The simpler you make it, if it's just support and resistance, for example, you know, support either got broken or it didn't, right? It's either a yes or a no. And then what could have caused that? Was it something economic? Was it news? What could have caused it? Right? That's when you can have that kind of conversation on that one thing, on that one indicator. I've seen traders spend hours, days. It's what pulls so many people out of the market. It's what pulls so many people out of the market when they think they have to sit here glued to the screen the entire day. You don't have to. You can if you want to nerd out and geek out, but you don't have to. And you don't have to trade 1 billion stocks in order to make money. It doesn't have to be that way. That's why this guide is specific to you. The 10-minute daily trading routine teaches you to see what matters and ignore what doesn't. It also allows you to have this routine inside of a short window. So if you work a 9 to 5 or a 9 to 9, whatever that shift might be, you work overnight during the day, whatever that lifestyle is for you, or if you got to be a soccer mom and pick up the kids, drop them off, you got pickups, drop offs, all this other stuff going on, or you're an entrepreneur and your business is pretty much 24 hours a day because you got to be on call, whatever it is, you would be able to find 10 minutes to figure out how to build your routine around the charts, doing the same thing over and over again, but you wouldn't have 15 million different indicators on the chart. All right, now we're going to get into the third scam, the third complexity scam with indicators. Professional traders use complex setups. Now, do they have access to computer and machine learning, AI, and things of that nature that we don't have? Absolutely. And what that actually does is allow them to not have human emotions around the parameters that they've set, where the computer will do it for them. Now, that might be complex, right? The computer, but not what they're specifically inputting into the computer, their parameters. That part isn't. Professional traders use the simplest setup possible. If they're looking on the fundamental side, they're reviewing that business like they're ready to purchase that business, period. If they're looking technical, more often than not, it's got to do with the price they believe that thing is worth, period. There's three main things: price action, volume, and support and resistance, which you can also call supply and demand, which makes economics work. It makes the world go round. It makes the money flow work for a business and a country. Those are the main three things. If you master those three things, every indicator you can just use as confluence, meaning just on top of those three things, because those are the things that are going to tell you what's going on with that particular stock, with that particular commodity, with that particular asset class. Complexity is a retail trader disease, not a professional advantage. It is not to your advantage to be out here creating this big behemoth monster that you can't manage mentally. Now, if you can code, if you can create your own bot and you can backtest using machine learning, AI, whatever it is, man, do your thing, because then it takes you out of the equation. But if you're just an average Joe who can't code, or an average Jane who can't code, then at that point, let's just keep it simple, master that. And then once I've got it mastered, I've been trading this, back tested it, I paper traded it, and I've been trading it live and have over a 70% win ratio. And hey, I want to take that to 73, 74, 75 percentage win ratio. Cool. Let me look at another indicator that could improve that for me. Or let me look at my risk management or my trade management that could improve my win-loss ratio by 5% year over year. Just like a business. I didn't say go from 70 to 100. I said 70 to 75. Because that could be thousands, if not millions of dollars for your account. The third point under this one: the most profitable strategies are the most boring strategies. And this is why it's a complexity scam. If I told you to simply mark on the chart support and resistance and then look at volume and that's it, that's not that's not sexy. That's not fun. What video thumbnail am I going to throw up there to say this is the only thing you need to trade? I mean, that thumbnail would get old after a while. But frankly, my entire course that I have, the Trader's Edge, is primarily dedicated to support and resistance. Teaching you price action, right? Teaching you trend, and then support and resistance. Because I believe if you have that, you can become a millionaire in the market. That's it. Doesn't cover 20 million different indicators. Just support and resistance. And the trade I'm going to show you today is, or the chart setup that I'm going to show you today prevented me from getting into a trade that looked great on a lower time frame. And it's on Walt Disney. So ticker symbol DIS. So stick around to the end. I'm going to cover that analysis top to bottom and show you how I could have easily gotten into a buy and been wrong really fast, buying into resistance. So I'm going to show you that, right? Black's put in the comment, I'm learning the fib. It's one of my favorite tools, but it's technically not an indicator. It's a measurement tool. So if you wanted to measure a stock at $100 and it went to 125, the Fibonacci just measures. It's not even an indicator. Now, can you use other pieces of the Fibonacci to say, well, I think based upon this measurement tool, it could potentially go here, indicating where the price could go? Absolutely. But at its base level, it's just a measurement tool. If you're in TradingView, for all my TradingView fans, lovers, including myself, because to me, it's the simplest platform to chart on. Are there more sophisticated platforms to trade on? Absolutely. But to me, TradingView is the simplest from your phone and your laptop. It uses regular left right clicking. Again, keeping it simple is everything. And I'm not saying don't use, and there's complication in TradingView, but as far as the user interface and clicking buttons, very simple, very normal, and translates to other programs that you would use in a Windows-based operating system or a Windows-based app or a Mac app. Simple. So if you're in TradingView or somewhere else, you'll see the Fibonacci is listed under the tools, not in the indicators panel. So it's a tool. And I love that you're learning it, Blacks. It's my favorite tool, period. Ask anyone. I've done courses and master classes on the Fibonacci repeatedly over the last 3 or 4 years. And I just actually started a new beginner's course for the Fibonacci in the accelerator community. We dropped the first edition. We'll have a second module go in there next month for the Fibonacci. Love it. Love that you're doing that, Blacks. If your trading setup requires a PhD in mathematics to understand, and you have a PhD, great. If not, you're not trading. You're not trading. The market rewards simplicity and consistency, which to me allow you to be disciplined. It doesn't reward complexity and confusion. Because if you can't repeat it over and over again, if you can't put in the reps like it's a free throw and you have the same rhythm and your thumb is in the exact same position and then it rolls off of the 3 fingers, it sits on the pad, wherever that is for you, if you can't repeat it over and over again, I'm a basketball coach. If you can't repeat that over and over again, it's too complex and you need to remove something from the equation so that you can get disciplined in your routine. Right? That's in the community. We're just trying to strip away all of the stuff, the craziness, just to focus on price action, market structure, then your risk management and trade management. Because once you get the charting down, most of your mistakes, most of your losses are going to come from your risk management and your trade management. But most people won't tell you that. I could literally have you just check or hit the buy or sell button literally randomly, like as if you were at the casino. And if you hit the proper risk management and proper trade management, you would be successful. Now, no, most people won't tell you that, because if you're managing your risk, you could just be roughly 51% accurate by randomly clicking the button buy or sell. But because you know how to manage a trade and you have the proper risk management, you don't blow up an account and you can grow an account. That's key. And that's what we do in the accelerator community. All right. So, no, not talking about the RSI necessarily. I'm talking about indicators in general, whether that's the Bollinger Bands, RSI, stochastic. I'm trying to think the Keltner channels. I'm trying to think of all the different, the main ones you hear about all the time, right? I'm talking about indicators in general. Too many indicators equals confusion and analysis paralysis. Too many indicators equals confusion and analysis paralysis. You cannot duplicate a strategy that has too much going on or too many indicators to look at. So I'm not beating up the indicators. I'm beating up how many you use and how are you able to duplicate them, and do you fully understand what each of these indicators mean. Now, I did forget to mention at the very beginning, I'll take every live and I will break down a chart. I forgot to mention that. So anybody in the comments watching live, this is your opportunity to drop a chart and see me analyze it based upon what we're talking about today, which is the most simplest form of price action and chart analysis. So if you got a chart you want me to take a look at, drop it in the comments. After I go over the one I pre-selected for today, I'll select one from the comments and I will actually chart it with you all live. All right. So I'm going to let you guys do that. I meant to give you that opportunity at the very beginning. And now I'm going to pull up the chart that I wanted to cover with you today. And I already told you which chart it was. It's Walt Disney. I'm just grabbing that and I'm looking at the comments at the same time. I'm also trying to find a blank chart that I haven't already charted on this one. I thought I emptied one before. Let me see if this works. And I'm minding the comments. Take this opportunity to make sure you get some analysis done early, not late. This one might be good. Nope. I see one in the comments. TGT, that would be target. All right, who else has one? Ooh, that's busy. Let's go here. What I don't want to do is do not want to erase my analysis. It looks like all of these are charted, and I always keep one window that's not. Anybody else have? I think this might be it right here. Yep, this is it. Nope, not it. All right, so I'm just gonna have to snap a picture of this, and then I'm going to clear it. All right. Hate to do it, but it's the only way I'm going to be able to show you guys from beginning to end. Oops. All right. Now let me share this screen with you all. And right now, Tina's in the mix. She's going to get hers done for sure, and that's going to be target. All right, let's go to the charts. All right. And I see Tina's comment. She said, save an additional template for lives, which is what I have, but for whatever reason, do not have it. Couldn't find it. I actually keep a very specific window without it, and for whatever reason, it's not popping up. That doesn't have any of it on there. So I'm sure it's there somewhere buried, but for whatever reason, probably because I'm live, I couldn't find it. So let's go up to the monthly chart. Now this is three things, just three things, right, that I use. And I'm going to drop the RSI down for now. Three things that I use. I always start on a monthly chart. And currently, I'm looking for peaks and valleys on this chart, meaning a valley with more than 2 touches. And I'm just going to mark this chart for support and resistance. And Tina, you may have to drop in the community if there's a different way of doing it. I think we're talking about the same thing, but if you could drop in the community the process you use, maybe via video or just a couple pictures, that'd be great, just to make sure I'm doing it the way you're mentioning, to have that blank chart for analysis and lives. All right, so that roughly gets me close here. And then for now, that's going to be probably good enough. So I'm going to just leave. There's a couple other areas I'd mark as support, major support and resistance on a monthly chart. So I got roughly 122, 80, and 40. Those are 43, excuse me. Those are the prices for support and resistance. And I'm going to show you, just based upon this, how this saved me money. Right? I'm going to go down to the 1 hour, and I'm going to show you a trade setup that I was looking at. And I'm going to go to about right here. And I'm going to hide this horizontal line for now, just for now. And this is what I was looking at, right? I'm watching price on the 1 hour, shorter time frame, make higher highs. 1, 2, 3 move is what we call it, but it's making higher highs. And then that would let me know I do want to be in buys, right, on the next pullback. Okay. And as this was happening, let's say at this 121, I might be looking for a buy trade right in this area as price and the RSI are going up. So I might be looking for the buy trade right here. And on a 1 hour time frame, it went well for a couple of dollars. But as price continued to work, it rejected and went lower, it would have hit my stop loss in a matter of days. Now, this is where price currently is. And now, all of a sudden, on the 1 hour, we're making, let me do that right. We're making lower lows and higher lows. So within this period and this period, price action is going in two totally different directions. And then if you count this period, so one period we're going down, next period we're going up, next period we're going down. How do I know which one to trade? How do I know which one to trade, and why is it doing this? Because in essence, I'm going to erase all the brushes here, all the yellow. When it's all said and done, I can look back on this now and say, oh, well, price was just trading sideways for the most part since July 1st. So most of the month of July was trading sideways. But why? Why? Why did I get caught up? Because I could have been in a trade down, right? And lost. I could have been in a trade up and lost. And maybe in a trade down without the proper risk management and trade management could lose as well. If that makes sense. All right. Let me know if you're tracking with me. Drop a 1 in the comments if you're tracking with me. Now, I'm going to add back that horizontal line from the major support and resistance. This 122 price is why it's consolidating. It's why it's accumulating, because this is a major level for Disney. How big is this level? In 2015, August, price rejected this 121 level and then traded sideways from August 2015 to April 2019. That is 4 years. 4 years. Retested this and basically traded sideways for 4 years. That's major. It broke above and then broke through and came down and created this level at $80. Then it broke above, and I'm on a monthly chart, retested this level, and then created the 202 all-time high for Walt Disney, which would have been post-COVID. And then the bottom fell out. They had a whole lot happen at Disney. I'm not going to get into the fundamentals. But if you watch the price action, price broke below this 121 level and retested it right here in 2022. And it has been trading sideways. Again, let's see for how many years. I'm going to use my one of these measurement tools. I'm going to use the date range here. So from here to here, it's been trading sideways. So since August 2022 to July, basically call it, we're at the end of the month, to August 2025, 3 years, it's tested this 122 here again in 2024, and we're right back at the same point right now. I'm not saying it's not going to go and break out, because it could. It very well could, right? But right now it's stalled out. If we go down a time frame, once it got here, it spent 1, 2, 3, 4, 5 weeks right around 122. And this is the first candle that did not touch, as of right now, this week, has not touched that 122 price. Has not touched it, right? I'm just checking the comments. Drop a 1 in the comments if you're still tracking with me. That's how important this 122 level is. So I don't want to be in a trade against this level that's been rejected, and I've got history that it could stay below that for 4 or 5 years. I don't know. I can't predict it. But what I don't ever want to do is buy into resistance and sell into support. I don't want to buy into resistance and sell into support. I want to confirm price action above support, meaning I want to see on some time frame price make a 1, 2, 3 move showing me, and it doesn't have to be this far. Maybe you go down to the 1 hour, maybe you go down, maybe the 1 hour is the right place. I want to see price make a 1, 2, 3 move that I like, showing me that we're ready to trade away from 121. And then I would believe, in fact, that this thing is ready to go up. What I do see is a 1-2 move. And if it breaks below here, I actually have confirmation that this could be going lower. That is price action. Notice I didn't say anything about indicators other than to say if I was trading a short term strategy and I wanted to get in here, the RSI would have told me to get in and I would have been met with a lost trade if I didn't have proper risk management because it wasn't ready to go up on a lower time frame. But because I have my major support and resistance levels marked on the monthly chart, I am able to see what's ahead, what's a potential danger zone for the type of trade that I'm trading, up or down. I'm not telling you where the market might go because I don't know. But if it breaks below this level, I would expect it to trade lower for a little while. If it breaks above this level, I would expect it to trade higher for a while. So if you're wanting to trade Disney, here are some prices for you. I'm going to tell you that you're going to want to look out for. 124.58, so a break above this previous high. Or, let me get rid of these so I can give it to you exactly. Or a break below roughly 118.92. So those are the two areas that if you see the break above these two, you'd want to be in buys over 124 and you'd want to be in sells below 118. So that's the chart I wanted to share with you. We had a request in the comments for TGT. So let's head over there. So this is my setup because I have Target charted, but for whatever reason, Disney was charted on here as well. All right, so let's minimize. I'm actually take the RSI off for right now. And let me ask you, Tina, in the comments, tell me which direction are you looking to trade and why? Which direction are you looking to trade Target and why? And I'm just marking my support and resistance. These aren't perfect because we're doing this live, but they're very close to where I would have them. Uber going down. Is that a chart you want to look at? I don't know if we'll have time today, but I'll definitely take it to the community blacks and we're gonna go over because we've been looking at Uber for a moment here. And I don't know. I'm actually gonna take this one off for now. Make this a weekly support level. Just need to zoom in just a little bit. So Tina, I'm looking for you to share with me which way you're looking to take Target, just for informational purposes. So major support levels that I'm marking, and let me put this one into up ahead, is Target out of trouble. Is Target out of trouble after this slide? And again, price action is key. This is a monthly chart, and you're seeing 1, 2, 3 moves to the downside, right? All of them heading lower on a monthly chart, that's rough. The trend is your friend. It's in a downtrend. However, it just ran into a major level of support and resistance at basically $90. You had a test of this support and resistance in March 2020. So this is the low for COVID. Then you had resistance here in 2018. Almost had it there in 15. And I think that's it. So this one was basically put in and confirmed by the March 2020 low. And then we just hit it again. So this is a pretty important area. And if we go to a lower time frame, starting with the daily, let's just go skip to the daily. You're going to see, if I go back, if I go back, you're going to see from March 2020, 3 bounces. So a triple bottom before it took off and ran to the all-time high up here around 271. And then prior to that, you had some resistance before COVID in July 2019, as well as beautiful head and shoulders in 2018. So that's what started this support and resistance. It was confirmed by the March 20 low, and we just hit this level April. So if you were looking to trade this, this would have been a decent trade. You would have needed trade management because the trend is still your friend. But you can see that this has moved roughly about $19 since this drop. Now that's not massive, but it's still 20. But you can obviously see this impulsive move down and this sideways consolidation, which is absolutely a flag, at which point could end up taking target lower. That's just my read on the chart. What would I be doing with this chart? I would be short term trading this to the downside. Now, I probably would have traded it to the upside off of this support, but I wasn't looking at it in April. There was an opportunity in May to get in, but now because I'm seeing this flag, and you can get your measuring tool, get your parallel channel, get your trend lines to draw it correctly. But now that I see this flag, I'm looking for setups to the downside, and I'll actually put one on just so we can get an idea of where it's at. And I'd be looking for trade setups that would take me down to the bottom of the channel with enough room and possibly enough time on an options contract that might take me back to this support level and possibly through to the next. An indicator, not an indicator, but a measuring tool that could help you out is the Fibonacci. So all we covered was price action. Didn't talk too much about volume. Very close to the 38.2. Maybe it's at the 50% retracement. Would have you that it really drops out of the bottom. Not sure. They got earnings on August 20th. So yeah, I'd be looking for this to spill the other way. So I'd be trying to trade it and get my trade management right to the bottom of the channel and see if I can play it out of the channel. And if it, turns around, gets to the bottom of the channel and then turns around, cool. I got great risk management. I'm probably out of the trade right there. But if it continues on, again, and I got great trade management and it drops out of the bottom, I set a little trail stop loss, and profit. And let's say I keep chasing it down and it breaks through here, and it's not going to go straight down, obviously. And now I've got a great trade depending upon how much time I bought on the options contract to run this down to 71. So that's the setup I'd be looking at. What range do you have? What range do you have, Tina? As we wrap up today's Trading Truth Tuesday, what range do you have currently for target, and what time frame are you trading that on? Tina's saying in the comment she's looking long once it hits her range. So I'm just curious what that range might be. I would have been looking at this long in April as well as May, but now that this channel has formed, it's giving bearish flag all the way. It will need an incredible earnings and outlook for the rest of this year and for 2026 for this to get out of this downward spiral that it's in. And that downward spiral is super clear. It has not, even with 5 made earnings right here from 2023 to 2024, it has been unable to get out of this. Got gaps up here. So fundamentally, it's struggling. And the trend is your friend. You would expect it to continue unless this earnings on August 20th somehow shakes Target out of what it's been going through between the boycotts, inflation, some of the different things that have been happening with tariffs, you name it. Target has been on the ropes since that run up from COVID. It has not recovered. And if you want to look at a comparison, here's the high for Target back in 2021, and you can see how it has performed since. Basically down, right? Keep it simple. And then if you look at Walmart, who is a direct competitor, I think I clicked on the wrong market. You can see since 2021, now there was a split right here, right around February 2024. But if you go back to 2021, here's where Walmart was in 2021 at the high, right? Here's the high in 2021. They too had a correction, but look at the chart for them since 2021. So there's something fundamentally wrong with Target that needs to be corrected. Maybe this earnings announcement corrects that, but I'd have to see concrete proof of that before I would be long off for a long period of time. So Tina put in the comments that her range is $60 to $66. So does that mean you'd be looking at 60 to 66 to be long? Meaning buying. So you'd actually need it to go lower before you could get into a long position, is what I'm gathering. Just let me know if that's your thought process. And I don't have anything I got something at 71, but not 60, 66. Because that would be another opportunity when it got there to possibly be long. But just want to confirm that as we wrap up today's Trading Truth Tuesday. I hope that this was helpful. I hope that you understand less is more. Less is more. And I don't want you all to forget that. Less is absolutely more. It's so important that you keep your strategies, your indicators, your overall approach, your system to trading, keeping it simple, easy to duplicate and repeat so that you can be disciplined in your trading. If it's not, I want you to take the time to go review, and I'm going to give this homework to the accelerator community. We've done it once before. We're going to go back to it again. Write out your strategy. We're going to pick it apart in the accelerator community for everyone to say, hey, man, what do you do with this step? Because that doesn't make sense. Or how do you do this? Because if someone else can follow it, when you explain it, you're golden. If it's a ton of questions, it needs refinement. Because it should be so simple that anyone can follow it. And that's what I want for you. So get over this complexity scam with all of these indicators, strip your charts back, get back to your price action, volume, and your support and resistance. I didn't get into the volume on this chart, but you can see at the support and resistance level, that's where your supply and demand are. And that's also where your volume is going to be. All right, so Tina put in the comments, that's a weekly range for me. Once price gets there, I'll drop down to the lower time frame for my entry model. Perfect. Love that. Love that. But yes, I agree. This thing could be headed lower. So there are some trades for you to get into where you could trade this lower and then possibly get in position for a trade higher. I do believe anything that you're trading higher at this point has to have a very precise risk management, trade management model, because it is in a downward spiral and they have not produced anything as a business to get it out of this death spiral. And until they do, I would not be long on Target without incredible risk and trade management. All right, so that's my tip for you on Target. We covered Disney top to bottom. Let me know in the comments if you're watching this on the Rewatch Crew, #rewatch. Which way would you trade Disney and Target? What are your levels? Let's share. Sharing is caring. And until next week, stay disciplined.